What is the most expensive weapon on Earth? A nuclear warhead? A stealth bomber? An aircraft carrier? No. The most expensive weapon on the planet is fear. And right now, that weapon is pointed directly at your wallet. 2 days ago, the United States and Israel launched the largest joint military strike on Iran in history. Iran's supreme leader was killed. Iran fired back at Israel at U.S. bases in the Gulf and reportedly tried to shut down the Strait of Hormuz, the narrow water passage where 1 out of every 4 barrels of oil shipped by sea has to pass through. Oil prices jumped overnight. Stock markets froze. Insurance costs for ships in the region went through the roof. And here you are watching this on your phone thinking, "That's terrible, but what does it have to do with me?" Everything. It has everything to do with you. And in the next few minutes, I'm going to show you exactly how a conflict thousands of miles away is quietly reaching into your pocket. But more importantly, I'm going to show you how to understand what's really happening. So the next time you see a scary headline, you don't just worry. You think. Okay, let me start with a simple picture. Imagine a bridge. A really narrow bridge. And every single day, millions of trucks have to cross this bridge to deliver food, fuel, and materials to the entire world. That bridge is the Strait of Hormuz. It sits between Iran and the Arabian Peninsula. It is only about 21 miles wide at its narrowest point, and according to the U.S. Energy Information Administration, roughly 1/4 of all the oil that travels by ship anywhere on Earth passes through this one tiny gap. The U.S. Congressional Research Service puts the number even higher, about 27% of the world's maritime crude oil trade. We are also talking about more than 20% of the planet's liquefied natural gas. Now, here is what you need to understand. Iran sits on one side of this strait. If Iran decides to make it dangerous for ships to pass through, either by laying mines, sending patrol boats, or simply announcing that no ships are allowed, which, by the way, Iran's Revolutionary Guard reportedly did just 2 days ago, then the entire flow of energy to the world gets disrupted. And when energy gets disrupted, everything gets disrupted. Because oil is not just the stuff you put in your car. Oil is the invisible ingredient in almost everything you buy. It powers the ships that carry your products. It runs the trucks that bring food to your store. It heats the factories that make your clothes, your electronics, your medicine. When oil gets expensive, the cost of making and moving everything goes up. Think about your own life for a second. Have you noticed that groceries cost more than they did a few years ago? That eating out feels more expensive? That your electricity bill keeps creeping up? There are many reasons for that, but a big one is energy costs. And energy costs are directly tied to what happens in the Middle East. But here is where it gets really interesting. The obvious pain, paying more for gas, is actually not the biggest problem. The bigger, quieter problem is what happens to interest rates. See, when energy prices go up, overall inflation goes up. And when inflation goes up, central banks like the U.S. Federal Reserve cannot lower interest rates. Right now, as of January 2026, the Fed is holding rates at 3.5 to 3.75%. Inflation is sitting around 3%, still above the Fed's 2% target. The Fed's own officials have said that cutting rates right now, while prices are still sticky, would be a mistake. The Chicago Fed president recently said that 3% inflation is not good enough, and that policymakers have been burned by assuming transitory inflation before. Translation: do not expect cheaper borrowing anytime soon. Why does this matter to you? Because when interest rates stay high, everything you borrow money for stays expensive. Your mortgage, your car loan, your credit card debt, your student loans, all of it. Every month you wait for rates to come down, you are paying extra. And every time tension flares in the Middle East and oil prices jump, the timeline for rate cuts gets pushed further into the future. But wait. There is another layer. When ships cannot safely pass through the Strait of Hormuz or the Red Sea, they take the long way around Africa, the Cape of Good Hope route. This is not a minor detour. According to shipping data, it adds about 3,500 nautical miles and 10 to 14 extra days to the journey from Asia to Europe. Since late 2023, because of attacks by Houthi forces in the Red Sea, most major shipping companies have already been using this longer route. Traffic through the Suez Canal dropped by about 75% in 2024 compared to 2023. More time at sea means more fuel burned. More fuel means higher costs, and those higher costs get passed down the chain, from the shipping company to the distributor to the retailer and finally to you, standing in the checkout line, wondering why everything costs so much. Nobody voted for this price increase. No government passed a law saying groceries should cost more, but it happened anyway. This is what I call the invisible tax. It is a tax that gets collected every time fear rises in the Middle East, and most people have no idea they are paying it. Now, here is where things get counterintuitive, because everything I just told you, the oil prices, the shipping costs, the inflation, that is the story you already know, even if you did not know the details. It is the obvious story, but there is a less obvious story hiding underneath it. And this one is more important. The less obvious story is this. In the world of global finance, the most powerful force is not what happens. It is what might happen. The fear of a disaster is often more expensive than the disaster itself. Let me explain with a simple comparison. Imagine you sell umbrellas. What is better for your business, actual rain, or a weather forecast that says possible rain every single day for a month? If it actually rains, people buy umbrellas once and they are done. But if the forecast keeps saying maybe tomorrow, people stay anxious, they keep checking, they keep buying just in case. The uncertainty is more profitable than the event. The Strait of Hormuz works exactly the same way. A full blockade would be catastrophic for everyone, including Iran. Iran's own economy depends on being able to export oil through those same waters. A complete sustained shutdown would devastate their revenue. Experts have pointed out that a prolonged closure would guarantee a global recession. Nobody truly wins in that scenario. But the threat of a blockade? That is a different story. When Iran's Revolutionary Guard sends a radio message saying no ships can pass, even if no ship has actually been physically stopped, oil traders react instantly. Insurance companies for tankers raise their premiums overnight. An analyst at Barclays said oil could hit $100 a barrel just from the fear alone. Another analyst at UBS mentioned $120 as a possibility if things really spiral. This gap between the fear and the reality is what some analysts call the fear premium or war premium. It is the extra cost built into oil, shipping, insurance, and ultimately your daily expenses. Not because something terrible happened, but because something terrible might happen. And here is the part that surprises most people. Certain sectors of the economy actually benefit from this fear premium. Let me be clear, I am not saying anyone is sitting in a dark room laughing while missiles fly. The world is messy and complicated, and there are real human costs to these conflicts that money can never measure. People are dying. Families are being destroyed. That is real, and it matters more than any stock chart. But the financial system does not run on emotions. It runs on math. And the math says this: when conflict rises, defense company stocks tend to go up. In 2025, defense was one of the best-performing sectors in the entire market. Shares of RTX, a major defense contractor, climbed 60%. Kratos Defense surged 196%. The iShares U.S. Aerospace and Defense ETF has gained 14% just since the start of 2026. The U.S. government approved over $900 billion for defense spending in 2026 alone. NATO countries have committed to spending 5% of their GDP on defense by 2035. Energy companies also benefit when oil prices rise. Their cost of extracting oil from the ground does not change much, but the price they can sell it for goes up significantly. The margin widens. Energy sector stocks have outperformed strongly in the opening months of 2026. Meanwhile, gold prices have surged past record highs as people rush to what they consider safe stores of value. The U.S. dollar has strengthened because oil is still priced in dollars globally. Now, I want to say something important. This is not a conspiracy theory. This is not me saying some shadowy group orchestrated a war to make money. Governments have real security concerns. Militaries respond to real threats. Diplomats are often genuinely trying to prevent catastrophe. The situation between the U.S., Israel, and Iran involves nuclear weapons concerns, decades of hostility, and genuine security calculations on all sides. But what I am saying is this. The financial system is designed to respond to uncertainty, and it responds in predictable patterns. Fear creates movement. Movement creates winners and losers. And the people who understand these patterns are not sitting at home watching the news and feeling helpless. They are reading the same headlines you are reading and making different decisions, not because they are smarter, but because they understand the game board. That is the gap I want to close for you. Not to make you cynical, not to make you angry at anyone, but to give you the same map that informed investors used to navigate these moments. All right? So now you know two things most people never think about. First, that Middle East conflict acts like an invisible tax on your daily life through energy prices, shipping costs, and delayed interest rate cuts. Second, that the financial system generates a fear premium that moves money in predictable ways during times of tension. The question now is, what do you actually do with this? Let me be honest with you right at the start. I am not a financial advisor. This is not investment advice. I cannot predict where oil prices will be next month, whether the Strait of Hormuz will fully reopen next week, or whether this conflict will escalate further or wind down. Anyone who tells you they know for certain is selling you something. What I can share are thinking frameworks, ways to approach this kind of situation so you are not just a passive spectator absorbing scary headlines. You become someone who asks the right questions. And in my experience, asking the right questions is worth more than any stock tip. Here is the first question. Whenever you see a headline about the Middle East, how does this affect energy? This is the starting point. Almost every economic ripple from Middle East conflict traces back to energy. If you can figure out whether a specific event is likely to push energy prices up, keep them flat, or bring them down, you have already understood 80% of the financial impact. For example, the recent strikes on Iran are significant because Iran directly borders the Strait of Hormuz. Compare that to, say, a conflict in a region that does not sit on a major energy choke point. The market impact would be completely different. Here is the second question. Who benefits when people are afraid? This is not a cynical question. It is a structural one. In every market environment, some sectors go up and some go down. During periods of geopolitical tension, the historical pattern is fairly consistent. Energy, defense, gold, and the U.S. dollar tend to strengthen. Growth stocks, consumer discretionary companies, and markets that depend on cheap borrowing tend to weaken. Understanding this pattern does not mean you need to trade stocks. It means you can look at your own financial situation and ask, am I entirely on the losing side of this equation? If all of your savings are in a regular bank account earning less than inflation, and all of your costs are tied to energy prices, then every time tension rises, you lose on both ends. You're paying more, and your money is worth less. One simple concept that financial educators often discuss is the difference between consuming energy and having exposure to the energy sector. Most of us are pure consumers. We pay for gas, electricity, heating, and everything that depends on those things. When energy prices rise, our costs rise, and we just absorb it. But someone who has a diversified portfolio that includes a small allocation to energy, through a broad fund, not a single risky stock, has a built-in counterbalance. When energy goes up and costs you more at the pump, that part of your portfolio might be going up too. You are not eliminating the pain, but you are not taking the full hit either. This is a basic concept, not a strategy recommendation. Talk to a professional before making any financial decisions. Here is the third question. Am I making this decision because I'm scared or because I'm informed? This might be the most important question of all. The financial system profits most when people react emotionally. When you panic sell your investments because of a terrifying headline, someone else is buying what you sold at a discount. When you rush into gold at its highest price because social media is screaming about the end of the world, you are buying high and setting yourself up for disappointment. The best financial decisions, according to virtually every study on the subject, are made calmly, with a plan, ahead of time. Not in the middle of a crisis, when your heart is racing and your news feed is full of explosions. So, here is my challenge to you. The next time you see a headline about the Middle East, and there will be more headlines, probably very soon, I want you to pause, take a breath, and instead of just feeling anxious, ask yourself those 3 questions. How does this affect energy? Who benefits from this fear? Am I reacting emotionally or am I thinking clearly? You do not need to be a Wall Street analyst to ask those questions. You do not need a finance degree. You just need to know that the game exists, because that is the real dividing line, not between rich and poor, not between lucky and unlucky, but between people who understand how money moves during a crisis and people who just watch their money leave. Let me end with something worth remembering. The world is always going to be uncertain. There will always be another conflict, another scary headline, another reason to panic. You cannot control that, but you can control how much you understand. You can control whether the news makes you a victim or makes you a student. And in a world where fear is the most expensive commodity, the cheapest investment you can make is in your own understanding. Because at the end of the day, the person who reads the news and feels helpless, and the person who reads the same news and asks the right questions, they saw the exact same headline. The only difference is what happened between their ears. So which person are you going to be?